We're going from the screen to the floor here in today's crude oil morning prep. I'm here in Los Angeles. I've got my charts loaded up on my end. I'm a technical analyst. I've been doing it over 10 years. I've got Marty Errico here in the on the call today. He's got his feet on the ground on the NYMEX exchange in New York City. And of course, we're going to go from screen to floor. I'm going to provide a detailed overview of a technical standpoint, top-down approach, analyze overnight sessions, previous days, and specifically, I'm going to drill it all the way down to London's trading session. The London trading session gives us a lot of good clues, and we're going to take a look at that today. I'm going to try to anticipate direction for you at the open and identify some high percentage trading opportunities starting at 8 a.m. Eastern Time this morning. Now, that's just me. I'm just a lonely old day trader in my home office looking at a computer screen. I'm excited, like many of you, to hear what Marty's seeing down on the floor. As you know, there's a lot of stuff that we can't get off our screens that Marty and his team on Traders Audio have a great leg up on us. And we're going to see today if his analysis, such as direction, risk on and risk off, divergence, market internals, volatility. We'll take a look at some options, open interest and strike points, and of course, we'll take a look at the floor levels, pit levels, pivot levels, all the things that Marty sees on the trading floor. So today's going to be a great opportunity for you to learn a little bit about a technical morning prep, and then we're going to see if that technical prep lines up with our good friend Marty here and see if we're on the right track for what he sees on the trading floor. So let me bring down here to another monitor and let's get started on the morning prep. As I discussed earlier, I always take a top-down approach. Now, I want to give a little bit of a disclaimer here while we're looking at this weekly chart. A weekly chart is great for a broad overview. A weekly chart would not be great for finding specific trading levels today. So for all the new traders out there, this weekly chart is ultimately just to paint the scenario, right? It's almost the chapter leading up to what we're actually going to use to make our trades today. The first thing we notice on this weekly chart, and we talked about this on my blog last night, is the way the candlestick last week closed. Of course, most of you guys probably remember this big drop down followed by this big pop right back up. The way in which the weekly candlestick closed, though, at the bottom of this price wedge, some of you may call it a pennant or a flag pattern. I call it a wedge or a triangle. Well, this wedge, you can see here, we have closed just at the low. As I wrote last night on our blog, we've nestled right into that low. Very, very big clue here because we did not close at the highs of the week. That gives the sellers now perfect opportunity here to step in and drag this thing lower as we go into the early parts of the week. Now, of course, that's just speculation. All we know at this point is, as of last week, though, we didn't close at the highs. So weekly chart right now leaves the door wide open for those sellers to come in and take full control. Let's move down to the daily chart, because the daily chart you're going to see here is going to give you a lot more detail. And this daily chart really does a great job at giving us, here a little bit more clue as far as what the important levels are going to be. Take a look at the important levels here this morning. And what I'm going to zoom in here is on this daily chart. Everybody knows now we have this big run up from last week, right? So there's your big run up from last week. That, of course, followed after that big drop down. We all know that. But what I want you to really look closely here at, the biggest clue we get is right here. Look at Friday's candle, right, in association now with Thursday's candle. What do you see? I see a big, huge body, right? And then we have these small candlesticks now that are taking up the inside of that body. In other words, the bullish candle was engulfing, right? It is engulfed. It contains the price action from Friday and, of course, now for today. So what we want to remember is even though the weekly chart shows us a big, big, thick, full-body bullish candle, we can easily see here that we have jumped up, pulled off those highs. Now we appear to be trading sideways. And like we said on the blog last night, a close above those highs or below these lows is going to spell success for one side of this market. So when I take a look at this daily chart this morning on a Monday morning before the opening bell, this really gets me thinking. We don't know who's in charge right now. Who's in charge? It all depends. A close above 94 today on the daily chart would definitely signal rising prices. A close below 91.85 is going to signal falling prices. Around and around we go. We'll see where we stop later on today. Again, that's above 94, and that is below 91.85. I'm taking notes here today, not to worry. I'll have them up here on the blog in just a moment. Moving forward, here's a 4-hour chart, 240-minute chart. This is one of our secret weapons in our live trade room. It's a blend between the dailies and weeklies, the slower anchor charts, and of course it's not as fast as an hourly chart, so you can make sure you're seeing everything in this. What do we see here? Well, didn't we just talk about this level right here? There's a level up top here now, 94, that's your daily level. So we know that daily level of 94, that's going to be a big important number. Look what's in our way here. We have to blow through now, and there's 91.85. 91.85 is a daily level. And these are big, big clues here this morning. We were talking about this last night with our members. When I look at this 4-hour chart, the first thing I can see is for crude oil prices to get and stay above 94, they're going to have to get through 93.59 first, aren't they? Right? That brick wall is waiting. That sell zone is there. That is supply entering the market. But look what we need to get to for price to get to 91.85. Not much at all. We just got to get through that 92 big round number. That's it. This 4-hour chart might be the most important clue we get. In order for us to get to 94, we've got to go through a sell zone. We have very little standing in our way here, getting to the 91.85. Remember, a close above 94 today is going to signal higher prices throughout the rest of the week. A close in the daily below 91.85 is going to signal falling prices most likely as either traders take profit or the short sellers come into the market. Either way you slice it, we can see the 4-hour chart gives us a sideways range here right now. We are going to look to sell the bounce off the sell zone, buy the bounce off the buy zone, and avoid trading in the middle. Moving forward, that's a 4-hour chart. Let's drill down now to one of our faster anchor charts. Here's a 60-minute chart. And on this 60-minute chart, you're going to see now the big, clearly defined bull channel. Had to look a little bit hard to find that bull channel. It was a little bit oddball of a channel, but as you can see here, take those highs, line them all up, and you can see some great confluence there on that channel. That tells us this channel is definitely in play, and this bullish channel gives us a bullish tone, right, to this early morning session today. Now, we talked about on the blog last night was how this bearish channel that we found here was likely to be tested the lows and see price bounce. Again, remember, this bullish channel takes precedence right now. So we are still, in the long term here, bullish, but we can definitely see here, though, we've begun to pull off this, and this short-term channel may win the day here. We'll see what happens. The bull channel, though, tells me higher percentage trades will be to the upside. And again, you can see sell zones overhead, buy zones below. Again, as always, we will wait for price to test the sell zone. Once it leaves the sell zone, we'll sell short. We'll wait for price to test the buy zone. Once we test the buy zone and move higher, we'll be looking to buy. The higher percentage of these trades will be to the buy side here, considering our bullish channel. And then last but not least, our fastest of the anchor charts. This is our 30-minute chart. We do have a 15-minute we can take a look at as well, but 15 minutes are going to be a little bit different use. As an anchor chart, you'll notice here we have broken that bearish channel. We do have a strong trend line here drawn below us with support just about 92.88, 92.90, just below that big round number. And again, we can continue to see that brick wall of resistance, that sell zone overhead that's going to stand between the buyers and closing above 94. 94 continues to be the number, the line in the sand here we see this morning in all these charts. And remember, 91.85, right below that trend line, that tells us a bounce off the trend line may result sideways ranges, but if we get below the 91.85, look out below. Prices are going to get ugly here as they tumble lower. Now that we have the 30-minute done, top-down approach, let's take a look at what's happening on the 5-minute chart. Now we're going to zoom in. We went from a bird's eye view now right to a street view. And let's take a look at exactly what we're seeing here this morning. Now, first things first, we can see that the London trading session has once again been active. We know from experience of watching this the same way every day for 10 years that the London trading session has all the clues that we need. The biggest clue we see right now is the size or the width of the London trading session. The size of London tells us a very big clue, and that is we are expecting prices to fill the London session. So this morning what I'm expecting prices to complete the highs and move lower. Scenario 1 for me is I am bearish going all the way down to London's lows. Scenario 2 this morning, if we don't make it completely down to London's lows, I'm going to expect a fake out breakout up to the London 272 and then the drop back down. If I'm wrong about that, not to worry. We all make mistakes sometimes. I will expect this to be a new price pivot, and our target will be the London 618. So I will be looking to sell short this morning between 8 o'clock and 9 o'clock. My target will be the low of London. If we do break new higher highs here, I will exit the trade short, look for a reversal now at the 272. Target will be the exact same. Again, if the buyers really have our number, we will look for price to be testing our 61.8. 93.20 puts us up now just above 94. We do have a projection here, a buyer's projection. This will be at 94.20, just above 94 if for some reason I'm completely wrong to the downside. So if I've got a cut and run for my short positions here going lower, I will be looking to hit that 94.20 to the upside. Again, I am bearish from 8 o'clock till 9 o'clock, selling short here from London's highs to lows, London's 272, down to London's lows, and of course a break and a hold above that. I will be buying up to that 94.20. That's it from my screens here in Los Angeles. Marty, I want to thank you for waiting patient for me. I've been making you wait too long over there, buddy. Let me get you started over here, and we'll get Marty going here with his now analysis from the floor. Marty, take it over from me, my friend.
No problem. Thank you very much, JJ. So we saw some interesting factors in the overnight session, and also on the Sunday night call when we were speaking to Dan, he's a local pit trader that I know and I like to speak to every now and then. And basically, you know, Dan, what was this run up that we saw last week? And he explains to me, well, Marty, there was a couple factors that made this run up last week, and you have to keep in mind this was an $8 move to the upside, an 11-cent move in RBOB gasoline, and an 18-cent rally in heating oil. So we're pretty much on highs. I mean, if you look at all those charts that JJ just showed, it shows us that we're either at a high of a wedge, a high of a range, or towards the high end of a range right now. And usually what we typically do at the high of a range is we sell. But let me continue here. Overnight session, we saw some news actually out of Syria, believe it or not. And this news out of Syria will be quite bullish for crude. It's a geopolitical risk premium that we like to focus on. And geopolitical risk premiums, it can rear its ugly head at any time, and we can see the market just spike. Now, half of that rally from last week was due to risk premiums, to geopolitical risk. It was because of Syria, the Syria regime. They were using nuclear weapons and not nuclear weapons, I'm sorry, chemical weapons against their people. Now, there was a bomb that went off in Syria this morning, early morning, and during the London trading session. And to me, honestly, that's just almost like an overnight gap, like I see on the floor charts every day when we open at 9 and we close at 2:30. There's always going to be a gap in price. So, you know, if, like JJ was saying, if you want to play that gap and try to, you know, fill that gap, most of the time it happens. If not, you'll at least get a 50% retrace of that gap. But let's now just talk about this morning what we see so far. So far, right now, I have somewhat of a sideways trade on the crude. Again, it has somewhat of a range from London. RBOB heating oil, we're seeing a little bit of the same type of sideways type trade here in the morning session so far. Right now, I'm looking here at crude right now here. Again, we're trading at the 93.37s. I got your Brent crude here holding levels above 103, which is bullish here. Again, Brent levels holding levels above 103. The Brent WTI spread dips below $10. Last night we were talking about Brent WTI spread at 10. We're 9.75 right now, very bullish. Now we're looking at calendar spreads. We're looking at June, July right now, 20 cents. June to August, 26 cents. June to Sep, positive 3. Look at that. Again, we're not in a carry anymore on the spreads, so very bullish here on our spreads right now that we're looking at. So this kind of influences on the prices that already kind of popped during this geopolitical news. Now, let's shift over now from looking to spreads and our multiple market divergence to just one other thing. Now, in the options, we saw 94. We saw 94.5, the tail end of some spreads that came into into the market last week. We saw a 91.5 to 94 call spread come into the market. They buy the 91.5 call, they sell the 94.5 call in the pit. Big trades, 7,000 lots at a time, huge volume coming in. Size was there. Again, on that particular trade, vol offered, gamma bid. We see delta, 50% on that trade or so. And we look at that trade and we say, what's the high end of the trade? 94.50. We can use that as nice resistance. Same thing we saw also, excuse me one second. Same thing we can see on, same thing we can look at that 90 to 94 call spread. Same thing, 94, decent resistance. So we're kind of stuck up on this $94 level, and it's used as really big resistance in big trades that have size associated with them. Now we look at this $94 level as a indecision level, as JJ mentioned. We can either break out above, get up to 95. 95 is the next level of resistance. If not, we can sell it. Now, yesterday, I was a seller here into the, not overnight session, but into this morning session. I was looking at somewhat of a bearish-like sentiment. I think it still stands, and I think that we can still use that bearish-like sentiment for this week ahead, right? For this week ahead. I'm thinking short-term right now. We could trade a little bit of a sideways chop here. Again, hold levels above 93. Trade within this little bit of a range, 93 to 94, depending on where we open this morning at the 9 o'clock pit session open is really what's going to determine whether we trade within this range of London or whether we break out of it and trade higher. Right now, I would say we could possibly make it up to 94.5 to 95 even in the short term, but definitely overall I'm a bear, and I think that we could probably trade within this range and trade back down to the bottom of the wedge. But short term, guys, like I just mentioned, we're going to trade within this little bit of a range, above 93.5 up to 94.5. So we could most likely see this right now here. Open interest, ladies and gentlemen, here currently stands 317,000 contracts, 645. That is lower from Friday's open interest of 223,000. So you can see we're lower by about 6,000 contracts right now. Implied volatility trading at 23%. Now keep in mind, as vol comes in a little bit lower, there's lower volatility associated with higher strike prices. So if vol comes in off the open, we could see prices trade higher. So I'm going to be using volatility as a pretty big judgment here because there's lower volatility in the higher strike levels as I was looking at that with some members of mine. And then also what we see is higher volatility and lower strike levels. So vol will be a pretty good indication. Volatility goes higher, go lower. If vol comes in just a bit and trades just a little bit more thinner, comes out to 20, we'll go higher. So pretty simple there. Same type of deal with the spreads. So right now, as I just mentioned, crude is 93.40, 40 cents higher from yesterday's settle, Friday's settle. Implied volatility 23% right now, and our open interest 317,645. RBOB 281.12, down about actually a penny and a half. Open interest currently stands 94,445. We also have your implied volatility just sitting at just about 25%. Heating oil now we're going to look at for the June. We're trading 285.11, down about $1.50 on the day so far, so a little bit of a sideways chop as I mentioned here. 19% on the implied vol in the Junes. Open interest 98,103. So we are seeing just a little bit of a decrease in open interest actually in all three majors across the board. That's energy complexes. As I mentioned, Brent holds levels above 103. Brent WTI spread below $10. And as we just continue on, let me just give you guys some levels to watch out for this morning from the floor that were just posted about 1 minute ago, that just got posted on the board here, guys, on the trading floor. So I will give you them. Let's see. So crude's pit session from yesterday, from Friday's session, high 93.42, low 92.04. I have a close and settle of 92.96. Now, we had a net change of obviously 34 cents to the downside yesterday, or Friday, a range of 130. And today your daily pivot 92.81. So 92.81 is your daily pivot for today, which we are trading above right now. First level of resistance, which we're trading at right now. Oh, no, sorry, we're not trading at that right now. First level of resistance here, 93.56, 94.17, 95.53. I got levels of support down below, 92.20, 91.45, and 90.09. Again, those are off the trading floor here. We'll also take a quick look at natural gas. How about that here as well? very quickly, we'll look at natural gas here for you guys that are trading natural gas. Natty gas here catching a bit of a bid in the overnight session here into the European session, into this morning session. We see natural gas trading a little bit higher. Again, we closed and settled around 422.80 on Friday. Now we're trading at the 427.60 in the June as May's expired. So June natty here, we're catching just a bit of a bid. Again, we could see us trade up to 445, which was actually the high of the range from Thursday. Again, after inventory numbers, that high that we printed, 425 even. I believe we could get back up to that. 445 even. Sorry, 445 even. We could see us trade back up to the high of that range as we were talking to Dan Razzie, one of our floor guys here, from one of our locals from the trading pit last night. He was talking about 409 to 445, the range in natural gas, and we could obviously see this get back up to the high of the range. We're on the low end of the range right now in natural gas. So I'm thinking here in the middle of the range, but we could catch a bit of a bid, get above the 430 today. We're not looking back, and we'll see that 20-minute opening range break. We'll get up to that 445 real quickly, I'm thinking, and that's the high of a range. Again, there's some news regarding a shipping license was approved for the U.S. start shipping their natural gas over to Asia. Now in Asia, their natural gas is $9, so it's a bargain from the U.S. So by the time they refine it, frack it, refine it, and ship it, that's right, frack it, refine it, and ship it, it's going to be probably close to $8, $7 to $8. So it will be kind of, still a bargain if you ship it over to Asia. So that's basically what they're trying to do over with the natural gas. That's why I think we could catch a bit of a bid and trade a little bit higher, back up to the 445, and that's really kind of what we got down here, guys, on the trading floor again from here in New York. And real quick, I'll just give you guys some numbers for natty gas real quick, and then we're going to wrap this up. Okay, so natural gas levels here. Again, we had the high from Friday and the low from Friday, of course, 423.5. Your low, 409 even. We had the close and settle 422.80. The range was about 15 cents, and our daily pivot today, 418.40. I got some resistance up at 427.8, 432.90, and 447.40, which is the high of that range, so that's perfect. Support down below, 413.30, 403.90, and 489.30. Again, those are just our levels there for the natty gas. We're expecting just a bit of a bid, get us back up to the high of the range, and that's about it, guys, already from here.
Boy, looking good, Marty. Say that 10 times fast. Frack it, refine it, and ship it. I love it. I think we got some Martyisms going on here in the morning prep this morning. Guys, as always, it's been a pleasure having you guys and gals here listening in this morning. Every morning, 7:30 a.m. Eastern Time. That's Marty Errico from Traders Audio. My name is Joseph James from School of Trade. We're doing the screen to the floor. This chart's going to go up on our blog. We are working on a members section website so we can give you guys some perks of coming in and listening to us every single morning. If you haven't been following along, our advice has been very, very accurate. And this morning, as Marty said, he's got a bearish tone to him. He's talking about 94.50 being a possible target to the upside. And, of course, I'm short here from the open off London's highs down to London's lows. I will be looking for a selling opportunity here, especially if it does push through to the London 272 as well. Once again, my name is Joseph James. I want to thank you guys so much for coming in and joining us today. From the screen down to the floor, I'm JJ at School of Trade. That's Marty at Traders Audio. Thank you so much for coming out and joining us every morning, Monday through Friday. We'll see you guys next time, 7:30 a.m. We'll see you tomorrow. Adios, amigos. Bye-bye for now.